Welcome to TradeTheMBI.com. This is Jonas Reports for the 4th of March. Everyone talks panics. They talk, yesterday the narrative was, it's looking good. Then yesterday it was, oh my gosh, the world's going to hell in a handbasket. And I'll show you this. None of this is out of order. We've made the new low coming off of the MBI weight spike that just took a while to develop. Okay, no biggie. We go straight to the intraday chart. This was all very clean. I mean, it started out with a clear white MBI. Magenta had broken down from, much earlier. This is, I believe, Deocon Paint Basic. If we look at it from Deocon Paint 2, you see a slight difference in how that reads. And these are the subtle changes that make. So the short took place yesterday, and you can see much cleaner from there. But the conversion from the regular Deocon bait on the turnaround buy. So it's just a matter of negotiating the signal adjustments there. This is the difference between following a trend and recognizing which one of the orange dips below DOC red, coupled with the turnaround of magenta over yellow and over MBI white. Right now it postpones because when it gets an MBI white reading, rising, stays with that rise of the MBI white until the conversion, but it needs to flip once magenta takes over. So that's just a matter of some little code adjustment. But then we turn to the 5K. It's the same paint bar, Deocon Paint 2A. You can see right there. The short was yesterday, and this just doesn't take a whole lot. People talk about the difficulties of markets. Like, all right, well, sell signal came in right there, 68.90. And even if you followed it all the way and stayed with there, 67.70. Simple math, that's over 5,000 per contract on the ES at least. So yeah, you didn't have to think, didn't have to do anything. It's just following the paint bar. You'll see my little yellow lines here. These are configurations that are setups within the coding that have specific significance that need adjustment. But even when you get 100 points even before the market opens, you still have the transitional ones that continue to trade in between. That are still many of these are additional 20-point moves. I mean, even this short right here from 78, even if you waited until this one, you're at 50. This is 28 points right there. That was not that long a distance. Then you get, the area here towards the end of the day when we ended up with the buy signal turnaround. That starts at 67.30, and before you got the sell, you were at 67.80, so another 50 points. So this was a over 400 point day. You don't need many of those to watch an account go through the roof. Then when you get into the smaller noise, fine, your returns aren't as great, but even simple signals like these, where 67.82 to 97, who's going to complain about that? You can go back and forth with it, whether you decide to trade the short ones or not. All those buy configurations worked out, and then later in the early morning, we started to get the sell signals that came through, and those really started to gain momentum. Look at all the MBI weight spikes as it continued to scale across, and it's that degree of fade that is clear. You're going to the 0%. You don't have to think about it. What's fun is when you see the day marker in that, and you get the MBI weight with the short cover. Well, that's just a short cover to suck in higher price for your shorts. And that's exactly what they did. Hit the 50%, and they drove that back down to the zero again, and it just multiplied into the illiquid market at the time. So, yeah, I mean, you only need to trade 2 days like this. It's an entire year. that people don't, it's beyond me, baffles my mind. I've been saying it for years. These unique situations are always the strongest time to be trading, not to be running from. And people whine about volatility, but yeah, if you don't know what you're doing, you don't have the right indicators. Yeah, volatility is a problem. You can get beat up pretty bad, but then don't be stupid. How's that? Yeah. Let's stick with the basics. NQ is already in a sell, so you still have those counter moves, and that's the thing about the short side moves. You'll get these strong rally days that then fade back again and then retest the exact same area. We didn't even dip below the red line, so this hasn't even been significant selling of any kind. And this is a problem. This is going to destroy all the work Trump did prior to, because he just couldn't get oil down. And I think the realization came in that it wasn't going to change. They tried the Venezuela, they tried peace with Ukraine. None of that worked. And then you had the negative aspects of what Iran was. I don't know what their end game with that is. All you're going to get is higher prices from this. And so the inflation game now has flipped on its edge. It's strange timing, given that you got midterms coming up. This isn't going to bode well. They think it's going to be over. Iran doesn't seem to agree with them. So we'll see what happens. I mean, it's a big country, and it's going to take a while to decimate it. That's for sure. Um, Stark reality is, though, when gas prices, LNG, double overnight in Europe, do you really want to be in a anti manufacturing community of the EU? No. And why you would want a euro? No, you're going to need to convert them to dollars to buy all that fuel that now costs you twice as much overnight. So that it's even this high is shocking. You shouldn't be in the 110 range; it should be a lot lower than that even. That selling though starts to create some of the disruptions. Is where you see you'll get gold retraces. That's still bodes well for gold. Is buy the dip is one of those situations, because from this viewpoint, inflation is already set to ramp up for the middle part of the year going on, and depends on how severe this gets, how broadly it expands. You're already seeing it move to a dozen or more countries, and yeah, this is where the wheels get off the bus real quick, and it's an uncertainty factor that now is going to start dominating the market narratives, and there's no way they can turn that off. Just stopping bombing now isn't going to do you any good, because it looks like Iran is committed to bombing as much as they can. It doesn't really matter. They're not really looking at military targets. It's never been their thing anyway. So anyway, that's the long and the short of it. Whatever your feelings are on it doesn't make any difference. We're just looking at what the market reactions are, and uh, the risk on factor of it creates a great counter trade, because as fear builds, you get all sorts of opportunities. Particularly from a bullish side, I think will end up being the strongest set. Uh, because you get too many people who want to sit on the sidelines. As they sit on the sidelines, they get left behind, and then that forces a rush to travel on through. Now, that's assuming, of course, that things stabilize to some degree. So we'll see. That's the long and the short of it for now. As always, if you don't have the indicators, foolish. Have a good one. Trade well.